Welcome to another episode of Tesla Stock Daily Drive, where we dive into the latest moves and news surrounding Tesla, all with a calm and thoughtful approach. I'm Dusty, your guide through the twists and turns of the electric vehicle giant's financial journey. Let's cruise through the market overview. As of May 15, 2025, Tesla stock is trading at $278.39 per share. Now, if you've been watching the stock like I have, you know that's after a wild ride. Tesla hit an all-time high of $479.86 back in December 2024, but since then it's taken quite a tumble, down about 42%. What's driving this volatility? Let's hit the road and find out. The first stop on our ride is a key story about CEO Elon Musk's compensation. It seems the board at Tesla has decided to revisit how Musk gets paid. After legal challenges to his massive 2018 pay deal, they're now considering a performance-based stock options package. This could impact his compensation based on some specific financial and operational benchmarks Tesla needs to meet. The committee's decision will certainly be one to watch and could have lasting effects on the stock's direction. Next, let's talk about Tesla's big push into autonomous vehicles. They're planning to launch a driverless taxi service in Austin, Texas, next month. Now, before you get too excited about hailing a ride from a self-driving Tesla, there's a hitch. The National Highway Traffic Safety Administration has asked for detailed plans on how these vehicles will handle not-so-perfect driving conditions. Tesla has until June 19th to respond, and the outcome will likely shape how this service rolls out more broadly. Then there's the political angle. Tesla's relationships and associations sometimes rev up more than their engines. Elon Musk's ties with President Trump have been a point of concern for investors. Tesla has even acknowledged that Musk's political associations might be dragging down their performance. In their latest earnings report, they noted a 20% drop in automotive revenue year over year, which they partially blamed on shifting trade policies and rising tariffs. Rounding off our financial stories, analysts at J.P. Morgan have taken a cautious stance. They've lowered the price target for Tesla shares from $135 to $120, based on expectations of declining deliveries. They're predicting Tesla will deliver around 1.78 million vehicles in 2025, a bit down from last year's numbers. For investors, this adjustment highlights a need to manage expectations as we move forward. Now, what does all this mean for you as an investor? Here are a few tips. Be alert to the developments regarding Musk's compensation package. It may signal how Tesla will harness leadership incentives to reach ambitious goals. Keep an eye on the autonomous vehicle front. The response to regulatory questions could trigger volatility either way. And finally, don't underestimate the impact of political dynamics on global companies. Understanding these factors can help you navigate the complexities of investing in a high-stakes stock like Tesla. As we part today's discussion, remember to stay informed and consider the bigger picture. Tesla's journey is often as electrifying as its products, and understanding the variables at play can help steady the investor's wheel. Thanks for joining me on this episode of Tesla Stock Daily Drive. Until next time, remember, when the dust settles, only the truth remains. Safe investing.